Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures. Crude oil finished up almost 1/2%, around that 57.5 area. Dollar weakness played a decent role in the crude rally. As you know, cheaper dollar makes crude more affordable to nations not where their base currency is not the dollar, so that pushes prices higher as the demand goes up. And we've had 2 consecutive days of dollar strength, and crude didn't respond to it yesterday, finishing slightly lower, close to unchanged, but seems to be responding today from that dollar weakness. Now, the tax plan, which isn't going to affect the price of a barrel of crude oil directly, could increase exploration and possibly put some downward pressure on crude oil in the future. Energy companies are fairly high tax companies. They don't have a lot of deductions. They do have subsidies, but they don't have a lot of deductions in their tax, and they have a higher effective tax rate than the big multinationals. Most of their business is domestic because they drill here and they sell to refineries here. So they're going to be decent sized benefits of the tax plan, and that could free up cash for exploration. It's not going to have a short-term effect on crude oil, but we are looking at some of the energy names getting a little stronger and potentially adding to the strength in crude oil in the short term, but down the road adding to the weakness that could come with increased U.S. supply. And then a little bit of that strength you have to give to, when you look at the intraday chart, you have to give to the missile attack that we saw from Yemen headed right toward the Saudi royal palace. It was intercepted prior to striking the Saudi royal palace by the Saudi Defense Forces. Now, this is a ballistic missile coming from Yemen. It's not known that some of the Yemen rebels had this kind of capability, but they are claiming that it did come from Yemen, and it was right in a flight path for the Saudi palace prior to the Defense Forces striking it. Now, I've mentioned before that crude oil is the longer time that it hovers in this sort of 55 to 60 band, we're at risk of a supply disruption based on geopolitics. Now, a missile striking the Saudi palace wouldn't necessarily interrupt supply, but it does have sort of a sense of jacking up, or ramping up rather, the conflict between the Iranian-backed forces in Yemen and the Saudi-backed forces in Yemen. And when Iran and Saudi Arabia is involved, that could end up being a supply disruption. So we did not get a spike that would constitute supply disruption, but it was the kind of attack that could ramp things up and bring one to the forefront. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.